I think one of the things that's been interesting is there's been a fair amount of, since you've seen a massive reduction in consumer sentiment, there's been a fair amount of studies getting thrown around that consumer sentiment really isn't that great of an indicator, because the actual behavior doesn't follow the sentiment. So people may say like, oh, this is all hell in a handbasket, but they don't actually allow that to deter their spending.
All right, Taylor, you and I have not caught up for the better part of a month. So I think we should just take a pulse. Love to hear from you as a Wall Street veteran on the stock market. Obviously, this morning stocks are ripping, but they were in correction territory. We've seen the Mag 7 sell off in a big way. We've had Fed Day. We've had tariff talk. We've had a couple of outstanding all-in podcasts. I'm not sure if you heard those from Lutnick and his peer, which name escapes me. But yeah, let's catch up. What do you want to talk about first? What's the most market moving over the last month?
Holy smokes. I think that Jerome Powell said uncertainty 92 times in his conference.
Is that all?
Just uncertainty on every way, shape, and form. So we can certainly talk about, I think one of the massive things that the market's kind of digesting right now is just how much balance sheet reduction are we going to get out of the government, and how much money is that pull out of the system that we've been just adrenaline junkies, capturing over the last few years. Tariffs are certainly a big one. What's going on with inflation, all of that. So you tell me where to take it, and we can take it.
Well, let's just go in that order. So you really talked about, DOGE or pulling back government spending. And that was the thing I was thinking about when I was away on my travels is, okay, wait. So in my opinion, we should have had a recession sometime in the last 2 years. We didn't, 100% because of government spending. That's now being pulled back in a dramatic way. I think it is very clear. In fact, I reported it this morning on the Daily Financial News, 72% of Americans. It's hard to get 72% of Americans to agree on anything, but apparently 72% of us are afraid of tariffs, right? They just don't know what they don't know what's coming. Yep. So I think that means consumers are going to pull back. And dude, I mean, just doesn't it? I don't know how this doesn't end in a recession to me. I just don't see how this combination of activities doesn't end in at least one down quarter.
Yeah. I think that the word that I think is the reality of what we're facing is the uncertainty is caused by transition. Transition's what's taking place right now. Mm-hmm. And I think that the government spending is the easiest tangible thing to put your fingers on. So I'll wrap some historical context on this. So currently we're running a 7% fiscal budget deficit in the United States. And just wrap some numbers around that to give you an idea, like that's not normal. So
no,
Japan,
that's like World War II numbers.
Yeah. So Japan's running 2, European countries are running 3-ish, we're running 7. And so now the government comes out and says, listen, we're going to reduce 7 down to 3. And that is just that massive fiscal stimulus that you're talking about that kept our economy floating over the past few years. Now, can corporate America and customer America keep our economy afloat without that massive fiscal push on the back end?
Yeah,
I'll add just like maybe 1 or 2 more points on this, just to give you some kind of seismic nature of our fiscal stimulation. During COVID, we injected 25%. The United States injected 25% of GDP into our economy. For context, just to give you how abnormal that was relative to the rest of the world, Australia was second at 18. Europe was next at 15. So we're just spending like we are absolute drunken sailors, like this game is never going to stop. And now the government says, hold on,
whoa,
we're stopping.
Yeah. It's really interesting because what I think this is going to boil down to, and again, we talk about the U.S. economy like it's this simple. It's not. There's lots of tugs and pulls and ins and outs. And I just see a timing problem. And I think this is true in lots of things. It's the same in real estate. Demand, right? Demand can turn off in an instant. Think about Washington, D.C., right? If you're in Washington, D.C. and DOGE comes in and starts threatening 50% cut in this and 50% cut in that, nobody is signing up for a mortgage, right? Because they just don't know what's coming.
Totally.
This is the same thing with government spending. I think it's a lot easier to turn off the spending than it is to ramp up consumers and private enterprise. Not to say that private enterprise and consumers won't eventually step into the void. I think they will. It's just a timing lag.
Right. I think some of that's intentional from a political standpoint. And I really do. I mean that. So if you think about, any administration that's coming in, Democrat, Republican, I don't care. If they want to initiate policy that they know in short order is going to slow the economy, what are they going to do it in year 1 or in year 3?
Oh, they're going to do it Q1 of year 1.
Yeah, you want to blame and at the same, you want to blame the political.
You want to blame the old guy, exactly.
And the other thing on it is, and again, that's not a political comment. That's just that is what it is. If it was Clinton's fault, Bush's fault, whatever, they blame the person behind them. And the other thing is like, we're digging a hole. The only way to stop get your way out of the hole is to stop digging. So it's not to say it's the wrong thing to do is to stop this spending in short order. Like, let's get out of our own way. We need to tighten up our belt fiscally, and let's not wait to year 3 and we've added on a few more $1 trillion worth of budget that we don't need to.
No, we are clearly on an unsustainable path. We all should hope that we bend the curve, if you will, and get back to 3%, which is far more sustainable than 7%. On this topic, since we're here, I don't know if you saw the All In podcast or listened to it with Lutnick and Bassett. Did you by chance hear those?
I did not.
All right, do yourself a favor.
I can't focus for 3.5 hours all in one clip.
Yeah. I would, especially for what you do, I would definitely take a look at those two. Probably Lutnick. If I had
they had them on together.
They were 2 different ones. All In podcast.
It's been very funny to see the difference in the takes just in general. So not on the podcast, but in general, Bessent has been more docile about what his impact, his thoughts on tariff, et cetera, impacts will be on the economy. Where Howard Lutnick is, to bet on a recession right now is you're a fool, this and that, and he's hard line against it on the other side. So it's funny to see how their different takes are. I will go back and listen to them.
Yeah, I think you would benefit from that. So let's go to tariffs again. I don't know if you remember this, but you and I talked. I think it was 8 weeks ago, might have been 10 weeks ago, with the very first threat of 25% tariff on Mexico and Canada. Right. And I said that Monday morning, dude, you don't understand. This is just some ploy to get them, to do something. That something meant 10,000 troops on the border. You remember that conversation?
I absolutely do.
Yeah. So it looks like just in the last 24 hours, President Trump is coming out and softening his threat of, basically trade wars. And now we're going to do a list of focused areas. I don't know if you've seen that this morning. But it certainly seems like the threat of an all-out trade war is certainly less than it was yesterday. I don't know if that's your take or not.
Yeah, I don't know. I think that the teeth of tariffs and the threat of tariffs start to abate if none of them are actually put into place for any sustainable period of time, unless you get a real bend of the knee, which I haven't seen yet. Yeah, the Ontario energy minister, whatever it was, stopped putting the surcharge on the electricity used by automakers. I got literally, so I have not looked into this either. I got literally a text from CNBC or whatever, notification from CNBC prior to jumping on this call that Trump is now going to, or has threatened, putting tariffs on any country buying Venezuela.
I saw that. I saw that in the last 5 minutes. I'm like, I'm not even sure how you do that, but
I don't know either. Here's the thing I have with tariffs, and I think they can be an effective tool. I don't think they can be an effective tool when initiated overnight. And actually, Elon Musk was on Joe Rogan's podcast and towards the end of last year, and he said, listen, tariffs are an incredibly effective tool to get what you want out of a respective country and to repatriate jobs to the United States. But he said, here's the difference. And it's funny that he is so instrumental in the government, but yet he has a very different take on tariffs. He said they can be effective, but they need to be employed over time. Right. So you can't think that a U.S. factory can be built and jobs can be created overnight. But if you get a year, 2 year long runway, which our political system just doesn't allow for, let's call a spade a spade. It's more of a Band-Aid ripping situation.
Yeah, I agree with all that. Well, let's switch gears to the Fed. We obviously had Fed Day last week. I had two market moving things for me. First, I can't believe Powell said transitory. I know. I got such a laugh out of that. I'm like, dude, learn your lesson. Dude, you have a sophisticated vocabulary. There are other words you could have chosen.
ChatGPT synonym.
Yeah, come on, man. You're better than that. That was a mistake. That was a mistake.
Totally.
But the other one was the dot plot. So we still ended up with average or median 2 cuts, although we moved pretty significantly. Now there are 8 Fed presidents saying 0 or 1, and I think there was 2 the previous time. So now we're up to 8.
Yeah,
I'm feeling okay about my 0 cuts in 25.
Yeah, it's interesting. It took a little bit of a hawkish bend. There were, I think it was 5 that were forecasting 3 cuts, and now only 2 that are forecasting 3 cuts. It was very funny because I thought the message was very clear, but the market interpreted it very differently.
Very different, right? Yeah.
Yeah. I took away 2 things. They increased their unemployment forecast.
They did.
And they increased their inflation forecast. And I'm
like, let's throw the other one on. They lowered GDP.
They lowered any one of those a good thing? Any one of those positive sign?
Those are all bad, Taylor, just so we're clear.
So here's the other thing. So with all of that, they also increased or reduced the potential amount of interest rate cuts to come. So you saw that and you go, okay. Now, back end of the other side of the equation is they're going to slow down their quantitative tightening, their other lever a little bit. But I don't see that as being a material impact like the market responded to. I'm of the mind at this point that the market was just materially short-term oversold. Yeah. And so it bounced on what I guess could have been really bad information out of Jerome Powell and the desire for that not to be the case. And that came to fruition, although I don't think it was that rosy of a message.
No, I've looked at it a couple of different times. I don't think that Fed dot plot was rosy at all. I think it was like, again, the thing that I looked at, I was like, dude, this is like stagflation.
Well, the thing that it reminded me of was, remember when Jerome Powell said, I don't know, a year ago, I can't see the stag or the flation.
I was going to just say that exact same thing.
I think he thought that was like a great line. Well, it's like, okay, stag.
How about now?
Yeah, you're projecting the economy slows, and the flation, you're expecting higher inflation. Like, both components, check.
Yeah. So now do you see it? You see me now?
Yeah. Totally.
Well, let's switch gears to something else that happened while I was gone, and we haven't talked. Gold hitting another record high. I have not checked this morning. It was over 303,050 the last time I checked, which was last week. But yeah, gold over $3,000 an ounce. That's got to mean something, no?
Oh, it certainly does. It's interesting because you got that little reprieve out of stocks. I shouldn't say little, like it felt bad. It was the first 10% correction we've had in some time on the backs of 25% years in a row. Like, you got to expect that. So you get a little reprieve out of stocks. They're bouncing meaningfully today. But I think there's a more ominous tune being, sung by bonds, where bonds, the 10-year treasury has continued to move downwards. It sits, somewhere in that 420 ballpark now, down from 4.8. And what's interesting there is there's kind of 2 impacts on that part of the market. So bonds are impacted on the longer end by inflation and GDP, just economic growth. And inflation isn't, moving the right direction is what the Fed's telling us. And so that has to be a little bit of a recessionary signal. And then gold is a fear trade. So gold's benefiting from both sides of this. Gold is benefiting from, okay, if we move into recession, check, that's good. Or if inflation is a problem, check, that's good. Yeah. So gold is the hedge to both of those camps.
Yeah, well, let's talk about that because, there is a chance, an unfortunate chance, non-zero, that inflation gets worse from here and unemployment gets worse from here.
Right.
Forcing the Fed to pick one.
Yep.
Any thoughts on which Jerome and his pals at the current Fed might pick? Because if we do get meaningful higher inflation, let's call it 3.5%, and we get meaningful unemployment, call it 5.2%. They're going to have to pick one because they can't fight them both.
Yep. I think inflation is the one they fight, but I don't think inflation will wind up being an issue. So I don't think that tariffs are going to drive, higher inflation that everyone is fearing right now. I think what they're going to be is demand destructionary as opposed to inflationary. I just don't think the consumer can take, another, we saw, 22% price hikes in goods collectively from pre-COVID. I just think that they're tapped right now. And
So
I don't.
so it'll be demand destruction. And again, destruction has an interesting kind of second step or second derivative, and that could actually bring in deflation.
It could. Yeah. Well, I mean, and you look at the market right now, and Jerome Powell hangs his hat on this, like 5-year forward, it is the easiest way to measure the actual market sentiment of where inflation will be. And they have remained well anchored, whereas consumer sentiment for inflation has come absolutely unbelievable.
Blazing back.
Oh, the worst, I think we discussed this prior to you leaving, the worst since 1995.
Yeah, the worst. It was, and again, I think that goes back to something I think I said earlier, right? 72% of Americans are afraid of tariffs, and the average American says tariffs equal tax equals more cost, and that's just how they roll with this. They don't see perhaps the bigger picture. But
yeah, and I think one of the things that's been interesting is there's been a fair amount of, since you've seen a massive reduction in consumer sentiment, there's been a fair amount of studies getting thrown around that consumer sentiment really isn't that great of an indicator, because the actual behavior doesn't follow the sentiment. So people may say like, oh, this is all hell in a handbasket, but
exactly.
They don't actually allow that to deter their spending.
No, yeah, they often say that, that's for my neighbor. I'm good, right? I'm unique, I'm special, but I don't know what my neighbors are doing. That's consumers are wild, folks. I've studied them for 30 years. It's kind of a fun thing to look at. So the last thing I want to kind of break down of where we're at is I wanted to share with you, because I know we both talked about this company a couple of different times, Tesla. Tim Waltz, I call him Timmy, came out and made fun of Tesla stock going down last week. And I got so pissed off. I actually bought Tesla stock at the open on Friday morning just because I was irritated.
Oh, I love this. Take me through it.
Well, again, it was somebody, a politician, the former vice president, Runny, or whatever they call him, basically saying that he was happy that a U.S. company was falling. We've obviously seen all the people lighting Teslas on fire. And again, I'm somebody, you and I have videos. I'm like, I would never buy that stock. It's a cult stock, blah, blah, blah. But dude, I got pissed. And I'm like, and I bought it right at the open at like 234 and change. And I'm up like 10% in like less than 2 trading days. It's kind of wild.
I love it. I drive a Tesla. It's funny. My buddy goes, dude, you have effectively put yourself in the camp where liberals hate you and conservatives hate you all at once. And I'm like, I know. But, and full disclosure, I love the car, for the record. Unless you have to travel far, then it's not good. But no, I agreed. The sentiment for Tesla has changed so remarkably. And it was the camp where obviously all leftward-leaning people that didn't want to use, have a carbon footprint, et cetera, were buyers. And then Elon kind of sits further on the right-hand side of the spectrum now. And I think that just the sentiment around the stock has gone clearly negative. And I also think that there was a massive, and I have videos to prove that I was saying this at the time, there was a massive illogical run-up into the election and then following the election. I'll just give you my thoughts on this real quick in short order. Basically, the illogical nature of the market was I got the fact that Elon Musk is good buddies with Trump. And so therefore he was going to be there, et cetera. So that's, about the end of the logic to the run on Tesla stock. The secondary impact of it, though, is that Trump has never been a proponent of spending other folks' tax dollars to subsidize the purchase of my Tesla. Right, Mike? Thank you. You paid for a portion of my Tesla.
Yeah, $7,500, I think, or 10 grand. Or
exactly right. And so at the end of the day, it's like, all right, if we're going to take $7,500 away from folks that are purchasing Teslas, that is going to directly impact and raise the cost by $7,500. And the bull case for Tesla owners of the stock was it's going to squeeze out every other EV maker in the market, and Tesla's going to be the only one left standing. Yeah. And I think that is one that really doesn't hold a ton of water, is what the market's saying is you better be able to endure a lot of pain, especially with a stock that was trading at 125 times earnings, which is,
crazy.
8x what the market was.
Yeah. Well, let's talk about where we're at. Obviously, I guess it was late Sunday, Trump came out with his comment on tariffs on Truth Social. The market's ripping on that this morning. It's a lot of people are calling it a short-term bounce, dead cat bounce, whatever, short covering. But where do we sit today? Stock market, economy. We got inflation on Friday. Where are we at as we wrap this up?
No difference of a stance than we stood last week or the week before. Trying to trade tariffs is, you had a week where on Monday auto stocks got hit 10.5%. On Wednesday they bounced 8.5% back. So like trying to play the chase your tail in a tariff kind of tit for tat. Hey, this sector is going to be impacted. I think the reality is, and I've seen this and spoken with a few people firsthand, where you see that the tariff thing is just leaving CEOs frozen right now. And that's exactly the reality. They just don't know what the impact is going to do. And I think the thing that scares me, and don't let me go too far on this, but it can just be a ripoff of the Band-Aid. So, okay, we threaten this, we get our action, we rip it off. The thing that scares me a little bit, and I just spoke with a massive landowner in Brazil that sells cotton, soybeans, and cattle. And he said the contracts that we're signing right now that are long-term contracts with China are remarkable. And it's the first time that this has happened in our history. And it is a direct function of tariffs. And he said they aren't short-term. So now, granted, that's anecdotal, but nonetheless, you get the point that there can be longer-term impacts of this. Sure. That I think are really warranted of concern, but trying to play it one side or the other with some sort of certainty is a fool's errand.
Yeah, the last thing I'll say on tariffs as we wrap this up is, and I think we said this right after, I think we said this in January, we both expected the first 90 days, call it 3 to 6 months, to be very chaotic. We're in the middle of that. The good news is we're halfway through. Right?
I love it. Silver lining.
Silver lining. We're halfway through. And again, I think, to your earlier point, you're going to want to make all of the changes early in your new administration so you still can blame the last guy.
Yep.
We'll be 6 months in a heartbeat, and then it's your economy.
Yep.
And I think things smooth out from here.
It's just so funny, the extremes, because we went from a president who was literally asleep. now we got
one that never sleeps. He's a vampire.
Every morning when he gets up, and it's like, watch out.
Yeah, he has energy that lasts for days.
Oh my gosh, he's unbelievable.
Yeah, pretty crazy. Where can people find you?
Yeah, find us on Instagram and on TikTok. We do 60, 90-second videos every single day on just what's going on in the markets.
Thank you, buddy.